Alright, so today we're going to go over the 3 different types of life insurance. So number 1, you got your term. So you got a 34-year-old lady. She wants a $500,000 policy for 30 years. How much do you think she's going to pay for $500,000 policy, 30 years?
$250.
$6.
Well, depending on her health, it's going to be somewhere between $20 and $40. So let's say $30.
Okay.
$30. But let's say she lives the 30 years. What do you think happens to the money?
Which money specifically?
The $30 premium she's been paying every month. What happens to this money
I don't know.
if she lives?
What happens?
It's gone. It's kind of like your car insurance. You know, you pay in, it's gone. If you don't get into an accident, you know. So that's term. But if she does die before 64, her family receives the $500,000.
Got it.
Okay? So that's just the basics for term. And then second, we got a policy called, well,
So how we
actually
pay-
no, we got to go over how we get paid, okay?
You got the green pen, show me the money.
Let's see the money now, right?
Okay.
Alright, let's say you work for PHP with us. It's going to be, well, you get paid 1 year in advance, so $30 times 12 is $360. $360. Depending on which provider you go with, it's going to be 125% bonus. Which is,
No,
$450.
$450,
Well, we
girl.
did that
which
part,
would
you
be
know.
$450.
I can't see.
700. She said I can't see.
And let's say you're an agent on a 50% contract, that's going to come out to $225.
There we go.
So how would you like to sit down with someone, just a couple minutes, and make $225?
Yeah.
Very nice.
Yeah.
Very nice.
Right. So 225.
Yeah.
All right. So that's term.
Yeah.
Second, we got ROP. So let's say
What does
same
ROP
30.
stand for?
I'll get to that.
There you go. There you go.
We don't want to overcomplicate things. Now.
There we go. Control the crowd, man. I like that.
All right. So same 34-year-old lady. Same $500,000 policy for 30 years till she's 64. So with this one, you're gonna be paying about 2 to 3 times more.
Okay.
So let's say $100, $100 a month.
Alright.
If she lives, she gets to 64, what do you guys think happens to the money?
It's gone.
It's gone.
No, that's the thing with the ROP. You're paying 2 to 3 times more, but you get all the money you've been paying in premiums back if you survive.
Wow.
Yeah,
Really?
right?
Oh.
So that's gonna end up being $100 times 12 for 30 years is gonna come out to $36,000 you get back into your pocket if you don't have an accident. But if you do have an accident over the 30 years, you're covered. Your family,
What do we consider an accident?
a death.
Okay, so be careful on the
Yeah.
word accident. I know we transitioned
Oh,
car
yeah,
insurance.
Okay.
So be careful on the word accident.
Yeah, I was thinking about the car
It
insurance
has
thing.
to be a death. There has to be death.
Yeah, so let's say we got, alright, let's say the insured dies, the family gets $500,000. If they don't die, they're gonna get the $36,000 back if it's $100 a month.
All right.
Nice.
Also, I know you know it. You just learned it. Do not use terminology. Don't use the word insured.
Oh yeah,
Because as your
I'll
future
make it
client,
too
know
complicated.
nothing
You're
about
like, what's
insured.
an insured?
Yeah, so let's say that the lady passed. Just use the lady. You can talk to the lady the whole time. Let's say
Yeah.
the lady passed away.
So the lady passed away, yeah,
Keep it simple.
her family gets the $500,000.
You got
If she
it.
doesn't pass away, she gets the $36,000 back.
You got it.
Got it.
Okay, so how do we get paid? Well, 1 year in advance, $100 times 12 is $1,200. depending on which provider, it's going to be, was this 120%?
Mhm.
120%, which will equal
1440.
1440.
Jinx.
And then let's say you're on a 50% contract with the agency, you're going to be getting a
What's half of 14?
half of 14. That's going to be 7.
What's half of
20.
20? There we go.
720. $720. So, sit down with the family, help them out with the ROP policy. You make $720.
Okay.
Now the third one is going to be
If these were cars.
permanent. So, if we were selling cars here, there's like 3 different types. You got your basic, you got your sedan. Basic, like Toyota Corolla.
Mm-hmm.
Second, this is a little more high class. You got your Lexus. Yeah, you get the money back. You don't get that benefit with this one.
Mm-hmm.
And then with the last one, this is the nice Ferrari.
Okay.
This is the max of the policies you can get. Okay. So why is that? Well, you get the death benefit.
Poor guy, I got the short board.
You get 1 death benefit, so that's the so same 34-year-old lady, $500,000 till it's permanent, not till 64.
There we go.
So, okay, you get the death benefit, which would be the $500,000. That's guaranteed for life. It's permanent. And then number 2, you get living benefits, which would be, let's say you got terminally ill or chronic illness. You'll get access to some of that life insurance money to help pay for your medical expenses or pay someone to help come take care of you, like take off time from work and stuff.
Mm-hmm.
Okay, and then the third benefit is going to be the cash value. It accumulates a cash value, which the easiest way to explain that, over the next 20-30 years, you're going to have access to this money, cash value, income, tax free. And out of all these 3, which one would you like to drive? You want the sedan, you want the Lexus, or you want the Ferrari?
Nice.
I want the Ferrari,
It's a
but I can
Ferrari.
only afford a Lexus.
Can I get a Ferrari on a Toyota budget?
How do you get paid?
We'll have to run you a
Show me how we
quote.
get paid.
Alright, so how you get paid, let's say the permanent policy. So $250 premium. Well, okay, can't be saying complicated words. Okay, so they pay $250 a month. You get paid 1 year in advance, so 250 times 12 equals
3,000.
3,000. Okay, and then what percentage is this one?
It's supposed to be 115%.
So 115, depending on whether it's AIG, National Life Group, whatever, times 115% equals
3450.
3450. And then let's say you're on 50% contract, real basic.
What's
You're gonna come out to $1,950.
No. What's half of 34?
17 something.
What's half of 34?
Help him.
What's half of
$1,725.
50?
I didn't get help, so.
There we go.
$1,725.
When I update your cards, it'll look like that.
So, sat down with you guys, couple minutes, went through all this. You can make almost $2,000 in, let's say, a couple minutes. What do you say?
Let me show you how simple this is.
You guys got it though? You guys feel confident with it?
Yeah.
Like if I were
Yeah,
you,
that was good practice.
if
That
you
was
know
definitely good
this, if you
practice.
can write this out like this.
Oh, wait.
Oh, yeah, sorry. Instant gratification. Instant gratification.
Yeah.
Uh,